Yeah, so here we have the Nifty charts, Nifty 50, and the parallel channel can be seen at the end, and there is a trend line at the top, and then the event is over. The major Fed event is over now, and we have an inverted hammer, almost like it, not a perfect inverted hammer, but that inverted hammer with the long wick sides on top indicates there is profit booking that happened. It was supposed to have background, actually it made a new all-time high, and then profit booking came, and it had fallen back, but it's made some kind of support. So the next level would be the 60 Fibonacci extension levels that's coming somewhere at 850, 25, 850, and right now it is facing the resistance at the 38 Fibonacci extension level. So suppose can come in at moving average at zones at 25, 200, that zone, and then 25,000 will be the next zone after that. Right, so that's support. And the Banknifty, if you look at, you have a trend line, and here also in the rounding pattern is there. For Banknifty also, the Fibonacci extension level 50 is where it is stuck, and if the rounding account is having a consistent green close above this in the coming days, then it could head up to 54,200. That's the 60 Fibonacci extension levels where it is. Right now, what is formed is an inverted hammer, which is probably an indication of a resistance and a reversal from their potential, but we could also look at that as since it's not a rally high, it can be looked upon as some kind of profit booking after making it. So new recent highs were made, but did not breach the all-time high, just by it missed it by a few points. So the hourly chart, you can see that it is gapped up. Both indices actually gapped up, and then profit booking came in and dipped a little bit, but it maintains the level. So this is much more better solid close on Banknifty as compared to the Nifty. Nifty also hourly candles, if you see, it is like a gap up, and then the hourly candles are showing that it is profit booking that came in, but it found support somewhere at the 50 or 20 exponential moving average. So daily, and that's what the analysis is all about, right? So FIs have been buying consistently. The event has happened as expected, and then there is big breakout moves retreating back into more markets. Those markets are not broken out actually. It's kind of indecisive inverted hammer formations, probably because profit booking there as well. Look at the Drawdowns, Nasdaq, and S&P 500. We don't see such big breakouts that has happened. So that's the reaction of the market for the event. That's all I have. Thanks.